This is Cece. Welcome to The Orbit. It is Monday, April 1st, the beginning of a new month, beginning of a new week, the first day after a 3-day holiday for the market. And we're looking at SPX. We are up barely, just over 0.1% to the upside, 5260 on the SPX. For the week, we are looking at about a 0.9% expected move at just 11 IV. So coming out of the holiday weekend, the market is not showing any signs of ticking higher in IV. And the reason for that is because of this quiet open. Now, this week, we've got some economic data. We've got some Fed speak all week. But the big thing is the jobs number, first Friday of April, the jobs number at the end of this week. And then looking ahead to next week, we have a very important CPI print. For today, and especially on the income from options Monday, we're looking at the 1-day expected move in SPX, and we are at just 0.25%, a quarter of a percent, and that is extremely low IV at 12 for 0 DTE. Typically, you see 0 DTE up above 25. Now, this could change very quickly. You have a weekend effect. You're coming out of a long weekend. The market is basically unchanged. It wouldn't take much of a move in the market, say 20 points to the upside or especially to the downside, where that expected move might even increase. You wouldn't see it decrease. And in fact, if the market kept going sideways, you are not going to see that expected move decrease that much for the next few hours. Typically, a quarter of a percent expected move you would expect to see with maybe 2-3 hours left in the trading day, not just 15-20 minutes into the trading day. You would typically still see this up around a 0.4% expected move. So what that means is from a options premium selling standpoint, 0 DTE, and we're looking out at the 2-day chart, and it's 10 IV tomorrow. The expected move is not going to be a normal theta curve into the close. It's opened up very small expected move. So you have some time on days like this to wait and watch. Now, on the flip side, it's an interesting situation because from a premium buying standpoint, and let's just back this out a month on the chart, from a premium buying standpoint, if you were playing for a breakout today or tomorrow or into Friday, or if you were playing for a breakdown, or even if you were just playing for movement, buying a call spread and a put spread and forming a long butterfly, let's say, with an expectation of a move away from 5260, you are not going to see a rapid decay of premium in these days. You are going to see, with a 0.9% expected move, you could almost expect that going into the jobs number, it's hard to see that the expected move would be anything less than, say, a half a point or 0.6%, let's say, to sort of protect that expected move and the distance that that expected move from the spot would be in, because traders don't want to get run over on such an obvious event. And if the jobs number was enough to move the market, move the SPX 1%, they're not going to be wanting to go into that event on Friday with a normal theta decay of the expected move and of options premium into Friday. They're going to want to hold it and elevate it a little bit to protect themselves, the sellers of options. Therefore, if you're in a buyer of options into the week, you can sort of use that to time and possibly stay in for a move longer than you would typically with, say, a normal theta curve and the VIX 19 or something, where you might get hammered on decay waiting for your move. You're not going to get hammered on decay waiting for a move with IV at 11. Bigger picture wise, let's look at this 3-month chart. Nothing has really changed here. We've got this channel higher, quite predictably gets to the bottom of channel. The channel gets bought, makes a new high towards the top of the channel, finds some sellers, maybe sees some volatility for a day and a half or 2 days, and then has a reversal at the bottom of the channel back higher. And this pattern has been going on for months. As you can see, we're looking at 3 months there in the past, and there is no signs of this having ended yet. Trading levels for the week, we have in the SPX, we have 53.10 to the upside, 52.10 to the downside. We are obviously about 50 points in either direction and 5260. So if SPX pulled back and was more like unchanged today, 5250, you could keep those levels 5300 and 5200 as shorthand in your mind. Let's go with an iron condor. Let's produce that on the 1 week chart and take this out to Friday. Not something that you would maybe necessarily want to be doing now, or you'd want to be doing it wider, but this is the type of trade where maybe if IV spiked into that jobs number and you could get wider outside of that 5300 and 5200 levels, and you could get pretty far beyond that, give yourself some room as a premium seller, it could be more interesting, but that would be something that you might want to wait for on a vol spike. Just a quick update about an hour on in the market. We've got the SPX down about 20 points from the beginning of the video, and I wanted to just detail some of the things we spoke about at the beginning of the video. If you look, the expected move now is about 0.25%, so it's at the same or even slightly more than where we started the day in the first half hour of trading. And it's now about 14 IV, so it's ticked higher a little bit, and this isn't much of a move lower. You go out to the end of the week, the expected move is 0.93%. That is more than it was this morning. So you've actually seen an uptick in vol with a fairly small move still inside the expected move for the day. We are down about 0.25%, but it goes to show at those low vol levels, it doesn't take much of a move to see an uptick in IV in the market. And then at the same time, selling premium, you're not going to see that normal theta curve decay throughout the day and throughout the week until you have those moments of a spike in vol. So if the SPX were to pull back further today and go down towards, say, that 5220 level or even towards 5200, that would be the moment where the weekly expected move would get back up above 1%, let's say, and the daily expected move would probably increase, to be honest, and get maybe towards 0.3% or even higher.